JJ Kinahan, the S&P 500 was flat in August. It was a pretty dull month for traders. That said, the TD Ameritrade Investor Movement Index was up a record 12.1%. So what's going on there? Why the disconnect?
Well, the disconnect is actually this. It's not that people were so aggressively buying everything, but as you said, it was a flat month. And as you know, the VIX came down significantly. I think it had one day where it was over 14 in August. And so with volatility low, they bought names they know, the Apples, the Facebooks of the world. And so with that, those stocks relatively had a higher volatility than the market overall, which again increased exposure because volatility is a component of the index. It is an asset class. So they bought stocks that were more volatile than the market overall. They sold some stocks that had lower volatilities. So that combination gave our clients more exposure to the market in terms of where everything else is at with S&P.
All right, you mentioned Facebook. Talk a little bit more about it, why it's so popular. Stock's up 22%. Can it continue that momentum?
Well, it's that's an amazing move for any stock, Greg. So to say that a stock could continue at that pace, I think would be very difficult. However, one of the things that we do know is our clients have been buying it all year long. It's a stock that's always one of the top 3 traded every single day at TD Ameritrade. And the reason being people use the product, they understand the product, and as we all know, with data being one of the kings right now of the world, Facebook does an amazing job of gathering data. So with that, there's a lot of reasons that there's good momentum behind this stock.
Dividend stocks were very popular in the first half of 2016. Ford and Pfizer were net buys in August. Do you think that's going to continue to the second half of the year?
I think that as we look at September and we're seeing that the probabilities of a rate raise now are back under 30%, people are going to continue to look for yield. We go out to December before we see a 60% probability of a rate raise. So with that, you have Ford with over a 4.5% dividend yield. You have Pfizer with over a 3.5% dividend yield. And the other thing about it is we're near all-time highs. These are stocks that really haven't performed quite as well. So I think people, as they sell some stocks that have performed well, are looking, where can I put my money? Here are some stocks that if we do turn around, theoretically shouldn't get beaten up as much, and they have some of that yield to cover some of the downside.
For example, Bank of America had a great August, and people sold it. It was a net sell. So is that some of the money that's going to get recycled into some of those other names?
I think it is. And, Bank of America, people looking at it say, well, hold on, wouldn't they be a beneficiary of an interest rate raise? But the stock was up 9% last month. I think one of the things we see more and more with this index is that our retail traders are thinking more like professionals. Some of the other stocks sold. Microsoft, all-time highs. Our folks sell at Yahoo, 52-week highs. So again, this is more of the mentality. A lot of the guests you talk to every day are professional traders, and these are the type of things that they do. They look for the stocks that have gone up well and look for stocks that haven't performed to buy after they sell those.
All right, and then finally, we're back after Labor Day. The professionals, they're back in their seats, they're trading away. So what are your expectations for the next few months? Are we going to see more readings in the Investor Movement Index like we saw in August?
Well, I think actually it'll be hard to do for one reason. The 24-hour cable channels have had to talk about the elections for the last year and a half. They got a lot of time to fill. Wall Street really hasn't taken the elections too seriously yet. Now that everybody's coming back to work, I think you might see some increased volatility as we head into the elections. And don't forget, it's not just about the presidential, it's also about Congress, et cetera. So I would expect that the professionals will be back buying a little bit of volatility to protect their assets. So with that, it will be harder for the volatility of some individual stocks, especially some of the favorites of our clients, to be above the S&P 500 volatility.
All right, well, thanks a lot, JJ.
Always a pleasure, Greg. Thanks for having me, bud.
And thank you for watching The Street.